Happy Friday. Good morning. Well, we got the greater than 100% retracement. Perfect. Everything's lining up here. We talked about that yesterday, whether prices might stop right at the high or it would set up with a concept of a greater than 100% retracement. What does that mean? Well, it's just an observation that has become part of the trading plan just by watching what happens over many years of when prices run from one reference point all the way to the next reference point and above and take it out, a greater than 100% retracement. And historically, what happens is momentum slows down. It doesn't mean things are going to tank. It means momentum is going to slow down. And then we look at other information, multiple time frames, how prices went up. When momentum slows down, what does that look like? Is it a gap and crap? Is it, a gap down day, or just a narrow range day where prices just consolidate and go nowhere? So concepts aren't strategies. There's one piece of information, we connect it with other pieces of information and points us to a bias, which eventually then we see if a price pattern lines up with our bias, that presents us with a trading opportunity. That's part of our trading plan. So we don't have any kind of a turn yet. We just have a piece of information that guides us to think, hey, this move up is going to slow down. And we can see it is slowing down pre-market, but we'll see how far that goes today. The other piece of information that we look at is market internals. Are they in agreement with a particular point in time where there's been a greater than 100% retracement? And they are. And yesterday we spoke about that this was close, and it wasn't quite there yet, but now it's close enough for what we call government work, which is pretty darn sloppy, where we have this reaching an extreme and breadth reaching an extreme. It doesn't mean this will turn on a dime. And this could gap down, the buy the dippers come in and rip it right back up again. Doesn't mean momentum isn't going to slow down, right? Whether it's today or whether it's Monday, our bias is momentum is slowing down, which means some kind of corrective process. And these internals, and if they kept buying calls, even if the market pulls back further than it is today, obviously this will push higher. And of course, if it stays at a higher level and the data that this is calculating drops off a lower number, well, that'll push this up into these upper bands, which it's not quite into the band yet, but historically 0.80 is an extreme. And we see here it just barely touched the bands, where prior to that, in the history, it was pushing up into here. So what that tells us is that sentiment has been slowly shifting to a more bearish point of view. Nothing really extreme yet, because otherwise it would have come down here. And it hasn't done that. But these bands are adjusting for a market environment that is changing. And the boxes aren't going to move, but you can see, I can pull up more data, but anyway, where it was coming up here, now you can see it's beginning to shift down, and the bands are shifting down as sentiment begins to change and makes adjustments for what is extreme on the upside or downside. Now, right now we've got breadth at a moderate extreme. It's above 100, we've got close to 200, but if we had a spike up day, it might actually get there. All right, so that is there. And let's put that down. SPX. There was premium at 54.80. I think that, as things are pulling back here, that might evaporate. We might have to get a little closer. But last I looked at that, I thought that was a no-brainer level up at 54.80 to do a call spread. I got a little behind and I didn't look at the downside, because I was mostly interested in the upside since it's run up, and to see if the sentiment and the premiums had changed to shift higher. Meaning, can you get further away now from at the money where premiums increase, which tells me market maker sentiment, if you will, or their models have shifted, and they increase the premiums on the upside, whereas on the way up, there were all these no-brainer trades way down below, where the sentiment was okay, based on the premiums. There was the belief that the market's going to pull back, and it's going to pull back big time. And as we look at the charts, you say, no, it's not going to pull back big time with candles arrangement like this and the way they're moving. And that's what made them no-brainer trades. So now up at, that 5480 level, or maybe you got to get a little closer that things are pulling back, or just see if it pops up at the open. Those premiums way above, relatively far above at the money, have increased, where earlier in the week, those premiums were really close to at the money, which made them dangerous. So give me a second here. Yeah, so now 4490-ish or so. It's probably good, but things could get out of hand. So the no-brainer is on the upside. Prices have run up greater than 100% retracement. Internals, while do not point us to a pinpoint turn, it's happened historically once in a while, but rarely do the markets ever turn on a dime, especially at the top. Bottoms are a lot easier to pick off than highs. That I can tell you 100% is a certainty. So we cannot get too bearish too soon, because other than maybe some day trades, and even for swing trades, we want to go pick on what's been weak. Some of the things that have created bottoms and have run up to some resistance area, because while these could come down, right? We picked off a nice call spread in coin yesterday off of an intraday setup and a daily setup that was extended. But those are setups that, hey, for a day trade or a spread, for today, one day away, when something's run up really fast, it makes sense. So what we want to see, yesterday we spoke about the consolidation that was forming that never broke down. Actually, it stayed all day and then it went up. And now that it's cleared that, a break below that consolidation is bearish. Common sense. Buyers were stepping up here. Right? It's run up. It's got a void. Buyers were still bullish. Right? They even ran this thing up into the close like, hey, this thing's going to the moon tomorrow. That's, while institutions are doing that and traders, of course, it really defies common sense to say the markets have run this far, greater than 100% retracement. Sentiment is getting to a bearish level. And I want to go all into the close with this setup. I mean, that's what I call a dirty Harry trade. You want to get lucky punk, to be holding that overnight as a trade into the closing, taking your money, fantastic. Right? But something like this, maybe you get lucky the next day. Anyway, so we got this consolidation on the hourly. We look and see where prices are trading now. And looks like they're still 453, 453. They're still above that. And they're still on the top of there at what we call minor support. So this move lower here is not damaging this chart. It's a small gap down. What would be very damaging would be if it was gapping down toward the low or below the low of this green bar. Now that would set up, go max the credit card, mortgage the house, a bear call credit spread trade, up above those levels up there, with a run up like this and gapping below a green bar. And certainly would set up intraday shorts. All right. Looking at other markets, Qs, been showing some relative weakness. We talked yesterday that they were at this pivot high. The other one was right here, and it poked up and came back in there, and so now it's just floating around here this morning. So momentum beginning to slow down this morning, pulling back to some support here. You see buyers starting to get in there for a little scalpers. It'll be interesting to see how this plays out for next week, as to whether, how far this pulls back and what it does in relation to this weekly chart. I mean, if we were to get a red bar next week, bearish turn here, that would be quite interesting. All right, Russell, all right, we talked about this getting tight over here at this resistance area, but that bullish price action, it pushes up into what's to the left. Yeah, there's going to be sellers there. And while that looks like, oh my God, the world's coming to an end on a 5-minute chart, put it in perspective of a higher time frame. It's an inside bar, right? Not even a wide range bar. So getting a little climactic there on the 5-minute, and looking to the left. It's always something to the left. It's never, every once in a while, the Fibonacci aficionados, get lined up with something where things make a turn. But if you watch those videos or any webinars of these guys using fibs and trend lines and so on, where they, oh, look how it turned right at my proprietary numbers. Yeah. Just look to the left. There's going to be a swing low there. There's going to be some consolidation. I don't know why they don't get it. But, it's like a used car salesman having to sell what's on the lot. Yeah, it's a beauty. You can't change. That's their business. But what I'm telling you is look to the left and you'll see the truth. All right. So slowing down at resistance there, no biggie. We'll see if it chops sideways. I'd love to see this show some relative strength, whatever kind of corrective process the broader markets would have with that internals signaling a turn here. And I forget who's showing you this. Greater than 100% retracement. Again, momentum slowing down, little topping tail. Yeah, right, Ken. All right, they're always going to have a new line to draw, new highs and lows to pick from, and all of that. So momentum slowing down here. We have to respect the way it went up with the wide range bars. That's power. So if it pulls back a bit going into the end of the year, buyers are going to show up again, of course, and maybe it'll continue to go up into the end of the year. We'll see. Now, it's a step-by-step process. We can recognize what is and historically what that means. And then we trade what's happening in the moment. So this could go sideways for a week and work off those extreme internals. It could pull back in a normal way, meaning it doesn't retrace that far. Maybe it stops at this cluster over here. Yesterday, I showed you about how opens and closes clustered together are consolidation in a smaller time frame, and you can see where my lines are shifting back and forth on the hourly chart, how it lines up with the base. So it's one way of knowing where support is intraday, but when you're looking at the daily. So either a boring go nowhere day, or maybe get a bit of a pullback here. Bitcoin, hell of a run, right? Little selling yesterday, and strong, right? Greater than 100% retracement was to the left there. It's going to go through a bit of a corrective process, normal. Crude oil, let's just go here to the continuous contract. It's had a big move, and you know what? Based on moving averages and what we talked about in MT Live, this correction where it was slashing down through and back up the moving averages and brought them together, this picture says, yeah, that's a little short-term extended, but the move just got started from here. It's not like this has been going up and up and up, and you can see the moving averages are getting further apart. So yeah, it's likely to correct a bit, but it's the move started here. It can go further. Right? And we see the weekly got a little extended there. So, if it pulls back over the next week or so, that's going to be normal. And we'll see. Here's our pivot lows, our major support. Does it close down below that, or what does it do? But the long side here, even though they're buying the dip, momentum slowing, risk is increasing on the long side. Gold, getting interesting. It's so messy, but that's a big red bar ignored right there. And they're buying the dip. So I think next week, maybe putting a toe in the water here. It's at this resistance. So let's see what happens. It's greater than 100% retracement as well on a smaller level. We'll see what happens. Silver was leading. That's up at resistance. This black line's the 100 MA, by the way, and it is lined up with this high right there. So that's how we look at a subjective piece of information like a moving average and look to the left and see, is it lined up with any type of resistance area, or is it in the middle of nowhere, meaning absolutely nothing. All right, bonds, the 10-year down a little bit. Now down here near these lows, which suggest interest rates, well, down a little. They're moving higher, and pivot high right over there to the left, up at 1.7 now. Looks like it can keep going. And the thing with interest rates, especially, and we talked about the 5-year, is that while it has bullish implications as far as the economy and so on, at some point, as short-term interest rates go higher, at what point is that enough competition for equities, which becomes bearish for the markets, in that, hey, I can go put my money somewhere risk-free, relatively risk-free, versus the risk of equities. And that's the risk with interest rates, especially on a short-term level, going up. When things get extended, Janet, I'll throw it on there as a reference point. I've used it over the years. I've taken the 100 away over the years. In reality, I don't need it, but the reason I don't need it is because if I'm looking at these two charts, I know that 20 MA on the weekly, which I have on my weekly, is the same as the 100. So I know where the 100 is if I'm looking at this at the same time. If I'm just looking at this time frame, well, and I put it on there, I know where it is. It's irrelevant on this particular chart because it's so far away. And it's the same thing as I use my 5-minute chart. If I'm looking at the 15, which most of the time I'm not intraday until maybe the latter part of the day, I'm just looking at the 5-minute chart, and this 60 MA being equal to the 20 MA on the 15, I know where the 20 MA is on the 15-minute chart, and I know which way it's sloped. So it's my way of interpreting and knowing what's happening on multiple time frames with just looking at one time frame. So that's why it's on there. That's why, what we coined in the MT Live, intelligent moving averages. Well, moving averages don't have any brains, right? We're using them intelligently by saying, hey, I know what the trend is on multiple time frames by the way I'm using my moving averages. And I know when prices are getting extended in multiple time frames, the way we use moving averages. So that's smart, rather than using indicators and, maybe looking at too much information at one time. Right? So my brain, not being as vast and as Dan's, that's a compliment, Dan. It can process a lot of information at once. I find it much easier for me to interpret and make decisions with less information. So I came up with the idea of, hey, these moving averages, if I can make them relate to multiple time frames, and I apply distance, slope, and position and a price void, I can make pretty smart decisions about what's happening with a limited amount of information, which is easy for me to make decisions on. And it works for me. I made the comment yesterday in the room to somebody about, less is is more, meaning easier to process, less information. But we all struggle with, what am I giving up, right? By not looking at this other information, which might cost me money or might affect me to maybe not make money. Well, if I can get the same thing with less information, which is easier to process, why not do it? So there's a bit of a psychological thing with removing information, thinking you're not going to be able to know as much. Right. All right, let me continue here so Dan can go. Transports, just fantastic move, breaking the low here and then taking out the high. It's got room to go up, but it is coming up towards some resistance there. But just, a real super positive for the markets that the transports came out of this downtrend. What we want to see now that we've got the sell signal internals is that, yeah, this can pull back and it might look ugly on certain days, but it really doesn't come all the way back down here. And we certainly want to see that the Russell, wherever it corrects, it just grinds back and forth here and kind of stays up in this area. And maybe, for the holidays, that everything kind of moves together and we can throw a few darts at things and make a lot of money as everything is hitting on all cylinders, so to speak. All right, I think I covered it all. Dollar, pulled back a little bit. It's been gaining strength, but maybe next week we'll talk about what that all means as far as companies and us and the economy and all that. So all yours, Dan.
Good morning. Happy Zero DTE Day. So, I just adjusted the stop here on our hood. Spiders. Yeah, back off a little from that afternoon run. Yeah, Thomas, we'll get to them. Yeah, I got it. There's a lot of earnings. AXP had earnings. Yep, that's on my long list. It's a big gap though, so I'd need a pullback. Look at this Olin I like. The gap's not too big, so over 30-minute high. The CSL, that's bullish consolidation, a 1, 2, 3. Yeah, there's a lot of earnings here. Lulu, I have no idea what you're looking at there. And Tesla, it's bullish, but you got to tell me what you're thinking. It's too far from the 20 for a swing for me, but it's a bullish 15 minutes, so it might set up as a day trade. Netflix, I have on my watch list for honestly, I like this one better than a Tesla because it's not extended on the daily and from the 20, and it had this small breakdown failure. So I like this one a lot better for a zero DT put spread. Let's see here, YouTube, Pedro, Pin. And it's it looked great the other day, and then and we were going to buy it because of the weekly. Now it's just pulling into support, downtrend on the 15-minute chart, so there's really nothing to do with it now. FitB had, yeah, that's fantastic. FitB was that one of my earnings over here? But that's a 1, 2, 3. Put that on my list. Yeah, fun. I was looking at that. I know that's gap in pre-market here, but that was a beautiful, beautiful long yesterday over Wednesday's high. That was very viable. It's a bottoming pattern with 3 inside bar, not inside bars, but 3 bullish bars there. Wednesday, we talked about moving averages. You got the 20 and 50 curling. And well, the high closing price here, yeah, help curl that up, but nothing to do with it now. Look at Trump's. My gosh, look at, I told folks in the green room, I thought this was extended at $15 yesterday. Man, oh man, oh man, look at that. It's more than 100% gap up right now. That's just, you know, what's shocking to me is there's no new news from yesterday to today. So what happened overnight to make this thing double again?
It's a Trump effect. Trump effect.
No, I know, but you're not answering my question. The same Trump effect is what made it do this yesterday. What happened overnight?
I give you my opinion. I
Tell me.
think that more people become aware of it and don't act based on, hey, it just went up gazillion%. It's Trump and it's going to go to the moon and I better buy it now.
All right. Yeah, there was some guy on CNBC saying that he's, you know, he wants to take on Facebook and Twitter and be a media company and this and this and this and this. And he was trying to insinuate, yeah, if he's going to compete with them and, you know, I don't know how many billion it's worth at the closing price, you know, under 5, let's call it. And so, yeah, I think he was putting in people's brains that, yeah, this could be $100 billion company. Yeah, Myrna, we have a put spread, but it's the 3 1/4 for today. So yeah, I'll keep an eye on this for us. And it's still $8 away, so hopefully we'll be okay. All right, Stephen is saying China got excited about it. Ron, I don't know what your question is on Beaky. We're in it. We're in trail mode. So I don't know what to say about it. It's fine. AXP, we talked about it, looks great, but the gap's too big. Yeah, so well, somebody's asking about Twitter, but let me start with Snap. So Snap's getting its head chopped off here because they said Apple's privacy things are hurting its business. That's a really big gap down. We'll see what it does. And so that's dragging down, you know, the people in the space with ad revenue again. So Google's down quite a bit here on Twitter. So you're asking about a day trade Twitter. It's just not my style. I don't know. I need more information, but there's no pattern right now, that's for sure. So Facebook, obviously, saying, whoa, that's an ugly gap in Facebook. My guess is these were, and you know what, Greg? You know how we manage our put spreads. So we were in Facebook on this green bar on Monday, and we took our money up here. And we could have said to ourselves, what are the odds of it, you know, going back to 320? Well, guess what? Even though the pattern didn't suggest this bearish gap, we have no headache on our hands. But yeah, so that it's halted, DWAC. So yeah, that's when we adjust stop on Myrna. No, not yet, John. Yep.